Today we're going to be talking about gender smart investing, and I'm so delighted that you've agreed to come and have a chat with me about this, because I think it's really a critical topic that not many people are too aware of. But perhaps you'd like to give us some background into why this is an area of interest for you.
Absolutely. Well, thank you very much, Louise, for us to be able to have this conversation, which I think is hugely important at this particular time, given the COVID context, given what's happening elsewhere around in the world, particularly in Afghanistan, in terms of highlighting the importance of gender equality and diversity and inclusion. I think what I've noticed over the years being involved in this sort of area in my capacity in private equity and VC investing is that there is a lot of awareness, or heightened awareness, I should say, over the time. There's a lot of discussion around diversity and inclusion, reports that have been sort of commissioned and showing the benefits thereof, which is all, been great progress in this field. However, there are still areas where there's significant gaps that need to be addressed and where action is really required. And perhaps we need to shift from the awareness phase and understanding to more intentional action and shifts in the areas of capital allocation to women fund managers and other areas where there are such disparities.
So Janice, thank you for setting the context. And yes, I mean, I think we all have massive heightened awareness over the, certainly over the last couple of years around gender and DEI. And of course, what's happening in Afghanistan has been heartbreaking. So this is definitely a hot topic, anything to do with women in business, women in life, and equality at all levels. My question is, just to bring this down to a really sort of practical level, if I were a startup organization looking for VC funding, and I didn't meet all of the usual investment criteria, how likely am I to get investment today as a woman in particular? And why does this differ from male-owned businesses or male-driven organizations?
I think there are a number of additional challenges that female founders face. I think it's probably worth mentioning that for any entrepreneur, it is difficult to get funding, and that most VCs sort of hit rate to investment can be as high as 1 in 100 opportunities that they review. So, it is a challenging space for a whole variety of reasons, mainly due to the risk profile of startup investments. But the additional challenges that a lot of female founders face is a difference in terms of size and quality of network in the financial area, often the confidence to present, the way that they're able to interact with various VCs is slightly different. I've certainly experienced that than some of their male counterparts. And then I suppose, in some level, there still is some subconscious biases in terms of actually and credibility that people need to work through and hold women founders to a higher level of standard than perhaps they do with male founders. But the landscape is shifting in this regard, and I think there is greater awareness, and some of it does also. It's a two-way conversation in terms of from the capital providers and equally the entrepreneurs themselves, and being able to get the support and influence or sort of advice that they need to be able to really present their investment case and their value proposition in a succinct and impactful way to investors.
So Janice, we always hear about what women should be doing better, presenting better, perhaps building their networks better, the list is long in terms of how we can be better in terms of, perhaps playing in the worlds that we want to. But what could men be doing better? Because clearly, I mean, if there is a level of bias in terms of investment, what are the facts and figures around what's been going on before we perhaps jump into that too deeply?
So, a lot of the areas that show that some of the real catalyst to investing in more female founders is actually having more female representation in the VCs and the private equity firms themselves in terms of their decision making and reviewing of these investments. And there, I think we're still seeing a critical shortage of senior decision makers in those teams. For example, Preqin, one of the main data analytics companies in the alternative asset space, has quoted that there are only 7 out of 100 sort of managing director type level positions in the private equity and VC space. So that's a massive underrepresentation of female input at that level, which is effectively going to sort of flow down into the investment decisions of the investee companies of those funds. And equally, this is countered by the fact that 69% of the top quartile VC funds have very strong female representation. So there's strong evidence to suggest that additional gender diversity and rural women in these particular positions actually add incremental financial return, as well as being able to potentially look at more diverse and innovative opportunities in a slightly different way that has previously been done.
So we're looking at the issue that we've all been working with for quite some time now, which is systemic bias, pretty much on every level. And I'm just wondering, it can be enormously frustrating for women in business, whether they're looking for funding or they're the ones perhaps involved in awarding the funding, perhaps if we put it that way, in terms of actually being able to get ahead. What will need to shift, do you think? I know that you've talked about incremental change being possibly the smart way forward. But what can we do to shift the focus here so that we can start seeing immediate results going forward?
So I think on various levels of investment making decisions, that one of the big impediments that's always suggested or always considered is the fiduciary duty or the lack of track record or the experience component that sometimes either first-time fund managers or some of these entrepreneurs don't have. And I think that, that is a valid concern, and one needs to appreciate that with capital allocators. They need to have a strong understanding of the risk return profile. But I think where we need to shift is maybe look at different ways of conducting things like due diligence to mitigate the, chicken and egg situation of track record and experience, when actually the data is starting to come through that there's such a strong business case for increasing diversity, inclusion, and female-orientated investments. So I think we can try and sort of have more innovative ways of looking at that, either through pilot projects on a slightly more incremental basis, but equally taking cognizant of the fact that there may be other value adds in terms of broadening the investor base, looking at different areas of the economy that these particular investments or businesses are serving, and being able to be a little bit bolder in the decision-making process than just falling back on track record and experience in order to facilitate a broader ecosystem, both for the companies and the investment houses.
So, I mean, that makes perfect sense to me in terms of a new innovative way forward and perhaps incremental changes in terms of how it's structured. How many organizations are actually looking at things this way? Is it something that that is top of mind? Is it a hot topic? Is it something that's being explored? Okay, I can see that look on your face. Perhaps not. Okay.
I think no. I think there's a willingness. There is a willingness in different institutional organizations and others to consider this. I think but there is still this difference between awareness and goodwill and actual action. Or that's been our experience. That we've spoken to a lot of people either as in a capital raising capacity ourselves as fund managers and in the deployment phase, where you understand where the potential value could be, and there's a willingness to expand, but either it comes back that, well, if you get other investments, perhaps then we will consider investing. That's often a good retort, that let somebody else take some of the risk capital, and then we'll be able to assess, and maybe we can come in after. So my sense is there's still this real reticence to move beyond the ways that due diligence and various other types of capital allocation decisions have been made, even though there's good intent.
Okay, so awareness and great intent, but a reluctance to act until...
Yeah, I mean, there have been a few really good examples, but they still tend to be in terms of providing real capital opportunities, but they tend to be more still within the DFI space. So that's the UN, the African Women's Leadership Fund is a great example of a platform where they've actively committed capital for female fund managers to invest in female companies. So these initiatives are starting, but they're still in the realm of either the DFIs or sort of government development organizations, rather than sort of in mainstream institutional investors, where obviously the bulk of the capital sits.
So Janice, is this, I know that you've got broad experience both in South Africa and certainly in Europe. Is this something that is common the world over? Is it typically held, with DFI, with government institutions or broader organizations like the UN, and is it happening at that level from a global perspective and locally within various different countries and continents, or is it specific to what's going on in Africa? I know that you mentioned Africa in particular.
Yeah, well, that was one obviously that I know, and I think there are other similar type initiatives elsewhere. I think the general landscape is pretty similar globally in terms of this gap in female allocated capital resources. I mean, a lot of the data that's coming out and some of the numbers that we are quoting are US numbers. Preqin is a global organization, but they were equally saying that the amount of capital that is overseen by majority female-led organizations is sort of in the 2 to 3% for VC and private equity, and that's a global number. So I think it's pretty pervasive everywhere, and in fact, if anything, just in emerging markets, it's even that much more challenging, given some cultural issues and other sort of fundamental economic aspects that make it, those numbers will be slightly worse in those environments.
Gosh, sometimes I don't know where to start with all of this. I looked at your facts and figures that it would take us something like 200 years at our current rate of progress before we looked at some equity around this. which is just way too slow. And I'm just wondering, I guess highlighting issues and being able to shine a light on this type of thing is vital, because obviously, anyone who's involved in this type of business, would hopefully have a look at what they're up to and how they go about doing things, and look at innovative ways of shifting things in the immediate future, rather than perhaps waiting for others to lead the way. But I'm wondering what can be done. I mean, I guess, it's easy to see where the issues lie. The question is, what can be done? And I think one of the things that has come to my attention recently is the launch of a new organization. I think it started in the US, and hopefully it'll be spreading soon, called Chief, which is all about women supporting women in business, and less from a sort of mentoring and sponsorship type perspective, but more from a very active, focused way of actually women uplifting women, and from a very practical perspective. And it seems that women are finding that in order to get ahead, somehow we need to do it for ourselves and for each other. Because waiting for things to change is, no one can even imagine 200 years. I think probably in 100 years we'll be living 200 years, but certainly not today. Is there anything that you feel that, in terms of women taking action around this type of thing, that can actually be done from a practical perspective?
Yes, and I think, a great example of that is a recent report that was published by the Gender Smart Investing, or sort of working group, that brought together a whole number of organizations with the specific intent of giving tools and templates or case studies to be able to promote the business case for shifting the capital allocation or the current percentages, because I think that is effectively where the value lies, and I think it's about education, communicating, but with real strong data points that make the decision process so much easier and directing it in the right way, and so that can be through, messaging to the asset allocators. It can make sure that where there are pilot projects, or where there are strong case studies, that they well understood and disseminated, such that actually this doesn't need to be a difficult decision. I mean, a lot of the facts and figures actually speak for themselves. And so it's just about continual engagement, messaging, and ensuring that we can change some of these subconscious biases, which have been there for a very long time. So I think one mustn't forget that, and one must also forget the progress that has been made. But we do still have a long way to go.
So interesting. I guess in a way we kind of come at this from opposite ends of the stick, and I've been doing a lot of research, as we all have, around diversity, equity, inclusion, and belonging, and that side of things. And I came across a report recently, which goes back, I think, to World War II, around bias, and it comes out of the psychology field and really speaks to the fact that shaming people into changing their biases actually has the opposite effect often. So it doesn't really help to burn bras and beat drums and what have you, and to shame people into action. And there has to be, as you said, data points, smarter, grounded, and measurable ways of moving things forward, because they make great investment sense. And it's wonderful to start seeing that becoming much more, that kind of data becoming much more available, and certainly my awareness has gone through the roof. Janice, tell me a little bit about your background, because I know that certainly you have done a lot around impact investing, and a whole lot of stuff that sort of points to this the upliftment of all sorts of people actually through business. Tell me a little bit about that and what got you going in the first place.
Yeah, so my background, or the main thrust of my background, was in a very traditional setting in the UK. Working for a highly regarded financial services group in the principal finance desk. So that meant that we were making investments on behalf of the company using their balance sheets. And it was very much sort of an investment banking culture, but it was very inclusive, actually, even though I was the only woman in the smaller team, and probably one of only 2 or 3 in the broader team. It felt I never experienced any of some of the challenges that I have heard women face from an organizational perspective, and I sort of managed to get to a senior role where I felt my voice was really heard. What did happen, though, and what I know happens to a lot of women, is that life also happens. And having had 2 children and various things, that does play a part in terms of how we think about our career and the amount of capacity that we have to be able to dedicate it compared to previously. And so that and a number of other things on my return to South Africa with my family meant that I wanted to really use these core financial skills in a more impactful manner, although I didn't know those were the words or the way that people were thinking about impact investing at the time, because obviously it was a good few years before it became sort of commonplace. But I did join an organization who had more of a focus on work-life balance and specifically invested in SMEs for both a financial return perspective, of course, but equally for job creation. So that became a very key component to our investment making thesis. And that's different to perhaps or at that stage, to a more solely commercially minded organization. And that was there were a lot of key learnings from that in terms of understanding which type of business models, which type of sectors, etc., particularly in the South Africa context, because that's where we were investing, would be able to generate both this investment return as well as the required job creation. And then from that has expanded. That was sort of the gateway for me in terms of understanding a bit more about ESG and impact on a number of different levels, not just job creation on its own. And it also, to be honest, highlighted for me the sort of need for more gender representation in sectors which have previously been underrepresented. And so with that in mind, I joined a fund manager, which is a majority Black women-led fund manager, to really try and have an impact and a voice in sectors that are key strategic growth sectors where we can actually shift the trajectory of both the underlying companies that we're investing, but also in the broader stakeholder world.
Yeah, really interesting. And I'm just thinking of the women-owned businesses that you have invested in. Are there any stories that might be good for us to hear and?
Absolutely. We were actually very fortunate, particularly in the sort of VC space, that a number of the innovative transactions that we got to review were led by female founders. I mean, one that's very well known in South Africa is Sweep South. That was Aisha Pandor is the CEO there, and she was one of the first investments that I actually made as part of that team. And I remember meeting her and her husband when we were still sitting on plastic chairs with our laptops on our laps during the due diligence, because things were only just starting to begin, and to see her now and how that company has progressed and grown, is incredibly rewarding. But it really was, a vast majority of that success is down to her tenacity and her ability to manage very complex situations, which is often the what sort of making a success of a startup is all about, and equally being very connected to the purpose and the cause of that organization.
Yeah, that's a wonderful story that, if anybody's familiar with the South African landscape, entrepreneur landscape, it's very familiar to all of us. And it is a very complex business with all its moving parts. And Janice, if we had to think about the kind of advice that you might give to your daughter, should she decide to be an entrepreneur in her own right, what would you tell her?
I think what I've seen is that you need, the usual VC language of obviously whatever organization you have is, what is your why? What problem are you trying to solve? And that is all obviously very good advice and critical. But it seems to me that the entrepreneurs and particularly the women entrepreneurs that are able to sustain that passion, to sustain the work ethic, need to be deeply connected to the vision and the mission of that organization, because so often the culture is set by those founders, and so I would really want my daughter to find an area that spoke to her at a real meaningful and impactful level, such that she would be able to radiate that energy, that passion, and that excitement, as well as the vision, to others, to really sort of help her on the way, and hopefully by that stage, being it a little bit easier to access capital, and make the difference that we all want to make.
Yeah, it's interesting, isn't it? I think staying close to young people and remaining kind of connected to what's coming through in terms of the leadership of tomorrow, in fact, the leadership of today, as we almost see, perhaps some of the old guard moving through, and young entrepreneurs really popping all over the world, and extraordinary stories. What are staying close to passion and vision and mission, and having that golden thread, that driver, of course, is immensely compelling. Not only from an investment perspective, but the ability to actually build teams, to build community, all the things that are vital in order to get a business going. Are there any other qualities that you see in entrepreneurs that you really that have a sort of common denominator when it comes to finding that little bit of magic, as I like to think about it?
Absolutely. It's being comfortable in ambiguous situations. It's being able to really identify the key drivers in the business. So it's a real complex mix of criteria of being, somewhat detail orientated, but being able to elevate oneself to the more strategic view as well. But I think what we found actually a lot of in the research, particularly what I did in the VC context, is that the most successful VC companies have a team and a complementary team that allow them to really manage all these different scenarios in the most optimal way, because no one person has all those qualities. So, you need the visionary, you need the, detail focused person, as well as the sales orientated person. So, there again, I think it speaks to a community or a team orientation, which does often sort of come more naturally to women to be able to navigate that journey.
Yeah, so true. And I'm thinking also about industry sectors, because we're seeing so many more women in STEM. The figures are still pitifully low, but so many more than perhaps a year or 2 or 3 ago. In terms of the investments that are most attractive to you, particularly in Africa, I'm kind of interested in whether STEM plays a major part of that, or are there perhaps different industry sectors that lead the way?
I think what we have noticed, and what I also believe, is that something like technology is no longer a sector in of itself. Effectively, it cuts through all sectors. So, and that's a real evolution, I think, of the last few years, that no sector can sort of disregard what their tech digital innovation type strategy is. So that really means that some of those STEM characteristics or people with those particular skills actually are relevant in all sectors to some extent, obviously, with various nuances, but so, that's hugely exciting, I think, from that perspective, and the evolution of having to have a digital footprint and understanding what that looks like from a growth perspective. So, I think from an African context, in terms of where the gaps are in education, healthcare, infrastructure, those are where the real needs are. And so some of the core opportunities are likely to be. And within all those aspects, there are tech elements to them, depending, on all, across the spectrum.
Yeah, it's so interesting, isn't it? I mean, digital used to be a strategy. I can remember having a very interesting in-depth conversation with somebody who was arguing that transformation was all digital. And of course, today we know that digital is no longer a strategy. It's part of the fabric of everything that we do. And if anything, the challenge is to humanize digital. Which, we can always go too far in terms of, how we operate as human beings in our connected world, or hopefully more connected as time goes on. Janice, I'm thinking out a little bit about Africa and how we've actually had to leapfrog from a digital perspective through the pandemic. And, sometimes it takes an extraordinary event like a global pandemic to force things to move forward in an escalated way that perhaps, the rate of change beforehand just would have taken way too long. And I know that Africa is good at leapfrogging every now and again. Something happens and we surge ahead and on we go. Do you think that the lack of connectivity, the lack of internet connection and the quality have a massive impact on people trying to build business here?
Definitely. And I think one of the key strategies that all governments need to have is the increased quality and access that all citizens have to the internet and the rest, and the democratizing of internet access. Almost, in some companies, it really is considered almost a human right at the current juncture, and what that means for opportunity and learning. And I think that it certainly is part of the agenda in terms of infrastructure and data centers and all the rollout that we're seeing in those areas to expand access. But it probably will also need some subsidization and policy changes for us really to see extensive reach in that area. But no, it's very high on the agenda of most sort of either impact-orientated strategies, DFIs, etc. Are seeing that as one of the pivotal points for growth and advancement.
Yeah, I sometimes think that with, if we look at the VC industry and we look at its infancy in across Africa, I think this plays a major part. But the other part, of course, is bootstrapping. So if we look at the natural sort of progression of entrepreneurs in terms of their rounds of funding and how they actually work their way towards VC funding, perhaps as kind of the pinnacle. But there's sort of almost a gap in the middle, isn't there, between sort of that bootstrapping and the next leap up, which would be, VC funding. And what's missing for entrepreneurs here, and what can we do about it?
So I think, there is obviously that bit in the sort of funding continuum required in terms of grants or other sort of soft funding avenues. Obviously a lot of angel investing. There have been a number of initiatives that are starting in that area. But to be honest, South Africa has had the benefit of enterprise and supply development programs, which has actually had some meaningful impact in those areas where corporates or private sectors have facilitated some growth opportunities for companies. Invariably, they do have to have started to some extent. So, where the difficulty or one of the main gaps, I suppose, is on the ideation side, from getting that to sort of commercialization is a very difficult leap, particularly on the more innovative type business models. And I know there is some focus that a lot of the slightly later stage VC fundings are looking at, because it is a difficult one, given the risk return profile.
And what's the cause, in your view, of that gap in the middle?
Well, the gap, if we look at where how it sort of met in a more developed market context, there's perhaps a bit more of a flow of entrepreneurs who've made good back into the system than in South Africa, just from a numbers perspective and a size of market, which does make it a little bit more difficult. And I think also the fact that some of the entrepreneurs, particularly the ones that one is wanting to really see shine and perhaps may have been previously disadvantaged, they don't have the access to capital, to the family, friends and fools, if you like, that a lot of other sort of markets do, which fill that gap that is difficult for a third party sort of even slightly commercially minded investor is able to do, and to prove effectively a proof of concept. Getting to that point
seems to be a lot trickier. But I guess we're looking at markets the world over that have at least similar type conditions, and we're seeing a lot of interesting things coming out of there. So Janice, if we think of 2021, 2020 is almost if I sort of think back to last year, it's always 2019, bizarrely.
Last year,
somewhere in the abyss. If we look forward, I always think, futures thinking is enormously helpful when we sort of take ourselves forward and then put the steps in place to get ourselves there, and just looking at sort of this time next year, if you and I had to have this conversation again in a year's time, what would be measurable progress? How can those small incremental changes, do you think, be realized? And what kind of courage and leap would it take for somebody to shift the needle, even just a tiny bit in each institution, so that we've got some really profound change?
I would like to think that the various different allocators of capital would have intentionally moved from discussing their gender smart or gender lens strategy or thoughts to actually having identified and potentially funded some credible fund managers or investee companies, depending on where you sit in the landscape, to some extent, with some key performance indicators understood up front and measurable, such that performance and the like can be tracked to re-enter the feedback loop and hopefully expand the markets in a slightly more sort of exponential fashion in that way, rather than just in a linear fashion.
Yeah, okay, let's meet again in a year's time.
Because I think just to sort of tie this in, what's happening now is that there are a number of good initiatives on an accelerator, incubator stage. In other words, trying to sort of upskill or provide an accommodating environment for either female first-time managers or some of the entrepreneurs, and it would be nice to see the sort of graduating from that of that cohort into the actual funding, deployment of capital, main decision makers within the economy. That would be real progress.
Yeah, that would be amazing. And I think just from a large institutional investor kind of perspective, I know that you're speaking soon at an industry event. Tell us a little bit about the message you want to deliver there in the audience, and give us some idea of what that's all about.
Yeah, I mean, I suppose it'll be sort of reiterating that type of message. I mean, first of all, acknowledging that we understand where some of these challenges are coming from in the pension and in retirement or the more sort of capital allocated community in terms of fiduciary duty, track record, all the building blocks that a lot of these investment decisions have been made in the past for many, many years. And to shift that is difficult when they're also custodians of, people's money. So to try and work together on what types of process and procedures, due diligence efforts we can do to mitigate that risk, or what sort of support functions such that are on an incremental basis, that with support of all the data that is coming up in terms of performance, that they can feel the shift and the move, that this is the right thing to do, albeit in a small scale to start with. And then let's sort of work together to grow this area or this sort of cohort of asset managers.
Yeah, and I think as you've said, even a tiny shift would have an extraordinary impact.
Yeah,
shifting the needle, certainly from the large institutional investor perspective. Janice, just broadly, women in business, and once again, thinking about the missing year and the year and a half. I know that today we're sitting on something like, we've gone backwards in terms of the number of women in business globally. I think we're sitting on about the 2017 levels. So we were making great progress. And because of circumstances, very practical circumstances, a lot of women opted out of being in business over this time. And perhaps as the world gets vaccinated and confidence is re-injected back into the marketplace, I'm sure accompanied by various different waves and all sorts of iterations around the virus itself, that will shift back again, but not fast enough. What is your perspective on getting women back into the workplace, and certainly, perhaps in a healthier way around how we actually live and work day to day?
Absolutely. And there's been done, and some great research has been done in this area as well by McKinsey, for example, who have highlighted the areas where we're seeing that women jobs are far more vulnerable than men jobs in the current COVID crisis, many more women are considering leaving the workplace, as you say, and actually a lot of those are at the senior management level. And that, I think, is important on a number of levels, because there's so much data to support performance increases, sometimes up to even 50%, when you have a more gender diverse senior management team. So if that actually reduces significantly, there will be impacts on the likes of GDP, even in various countries and environments. So there's sort of the more clinical area, and then obviously there's the culture impact and the more sort of softer factors that will be hugely sort of real regression, as you mentioned, in terms of a lot of the progress that's been made. So in order to try and address some of this, I think there does need to be some intentional revisiting, companies looking at their organizational arrangements, whether that's through flexibility that needs to be accommodated, resetting of some performance requirements in the current environment. A lot of women were sitting with pre-COVID, sort of key performance indicators or metrics that need to be met that would just, are in the current environment unachievable. And so all of those factors need to be reviewed, and equally to try and get an understanding in the individual organizations, what the key sort of things have been that have made it difficult for women to continue to feel connected, that they're wanting to leave and not be part of the workforce in the current climate.
Yeah, it's so interesting. I've been tracking all of this all the way through, as I'm sure many people have. And the resistance to going back to what was is high. And it doesn't really matter what gender you are or any other, any other differentiators. But what does seem to be true is we don't want what we had, and not in the form that it was. And it was almost, I think with a bit of hindsight and a bit of space and clarity, almost inhumane for many people working in the way that they did. And I think that we are seeing, without a doubt, almost two schools of thought. We're seeing some major resistance from some investment banks. We've seen this popping, all over the media in the last few months, with some organizations pushing to have things to go back to the way that they were. And in some cases, there are decent reasons for it, but largely speaking, people don't want to be forced into a particular style or way of working. They want the flexibility. And we seem to be looking at honoring the whole person. For a very long time, we've been telling people to bring your whole self to work. It's kind of been the cry. And yet, here we are bringing our whole messy selves to work, albeit in a very digitized fashion. And it's not working. And I know that we've seen something like 40-odd% of people in recent polls, looking at global polls, saying that they would leave their company or change their profession. So that's kind of the broad global perspective around this. If we bring this back to women, particularly in Africa, because I think that that's, we're just shining the spotlight on Africa for a moment. What do you think that organizations here need to do in addition to the usual, I guess, the strategies that are being explored at the moment in terms of some sort of healthy hybrid work life? Are there any additional things that we need to be looking at that would make women staying in the roles that they have easier, or bringing women back into business easier for those who've left?
Yes, I think it's probably adding a little bit more impetus to some of the mentoring and programs support programs that a lot of the bigger corporates have in order for women to feel more connected or to have a safe space to bring up some of the issues that they're facing, given the various challenges that COVID and the hybrid working model might mean for them in their current role. And because it's still yet not as easy for women to speak up. I mean, I generalize, obviously, but in the African context, sometimes even more so from a cultural perspective in certain areas, and where there hasn't been the same longevity of representation that there has been in other areas, and still very few senior women at an executive level to actually hear and implement these particular suggestions. I find it so interesting that South Africa ranks very highly from a board representation, for example, of female women. And so, we're very proud of that. And that is something to be proud of. But I think if you scratch below the surface to realize that 80% of those board positions are non-executive female board members, that means that the number of actually executive senior women who are having the day-to-day input and authority to shift culture, to shift to implement some of these policies is actually very low. And that is something that we need to really have a think about collectively and make sure that progress is met.
Yeah, I'm with you on that. There seems to be a massive gap between board and and South Africa can also celebrate, a high representation of women in most businesses, but it's that executive level that, as you say, and of course, the business case for that executive level being at least equally represented is so high, it's almost criminal to ignore it. In terms of bottom line today, it just doesn't make sense anymore. So yeah, I'm with you on that, definitely. Janice, thank you so much. It's been absolutely amazing talking to you, as ever. and let's do this next time. I'd love to revisit the topic and see where we've got in terms of progress. Hopefully,
yeah. Absolutely. Well, it'll be a date for a year's time where hopefully we've got a few good case studies to share and momentum actually being sort of translated into actual traction. So I look forward to that.
Yeah, wonderful. Thank you, Janice.
Thank you.